There were so many opportunities early in my career that I didn't recognize because I was just focused on the fairly narrow framework of, what are the rules? You've got a job, you've got a boss, you're supposed to do your thing. I wasn't really looking at the world around me saying, where is there opportunity to do a smart thing where other people are doing dumb things and to make money at it? So if I had broadened my perspective earlier in life and really kept my eyes open, I would have had lots and lots of opportunities to recognize entire fields of business where there was opportunity to use my software skills to build a better mousetrap.
Welcome to Future Skills, where we prepare you for a future of accelerating change. I'm Ludvig Sunstrom.
And I'm Karl-Mikael Syding. Welcome to the final episode of the year for Future Skills and our season number 1. In today's episode, we pick up the talk with investor, author, podcast showrunner and technology entrepreneur Erik Townsend. Once again, we cover a lot of ground, including his views on decision-making and strategy, technological progress such as automation, and his current views on gold, oil, and Tesla. In the next episode, we will do an hour-long episode summarizing the most important lessons from our 15 guests during 2018. If you prefer written summaries, check out futureskillspodcast.com and subscribe to our newsletter. This episode, just as all others, is edited by our own Alexander Martin. Thank you so much, Alex. Now, let's get on with our talk with Erik Townsend of the Macro Voices podcast and author of Beyond Blockchain. Welcome, Erik. So, Erik, we talked about investing in the last interview and we more or less finished on that topic, but I still have a couple of quick questions before we're done. This is a big one. What's your current view of the most important thing to consider in the financial markets the coming 12 months? And it could be anything you want to talk about, geopolitics, momentum, the dollar, whatever you want.
Yeah, I think the most important thing in the next 12 months are the recession signals that we're seeing right now real? Are we about to go into a recession? And from just a cyclical economic standpoint, that has a lot of implications for financial markets. That's not the really big thing, though. The really big thing is, we've been 10 years in completely uncharted territory with all of the central banks around the world stimulating the economy by expanding their balance sheets and pumping up the prices of assets. Is it possible, and I'm certain it's possible, the question is whether it's going to happen, is it possible that this economic downturn that we're already seeing signals is starting is going to result in a massive unwind of the asset price appreciation that we have seen over the last 10 years? As so many people have said, this can't last forever. You prop markets up with artificial stimulus. Someday it all has to collapse. Well, the people who say that don't really know for sure because we've never been in a place like this in history ever before. So it's an unknown, but there is a large body of people who think that we could see an unwind when the next cyclical downturn comes in the economy, and it seems like maybe it's coming in the next 12 to 18 months. So I think we're maybe at the beginning of something really big, and I don't know for sure. It seems like there's a lot of signs we're at the beginning of something cyclically normal to the downside. Is it going to be the straw that broke the camel's back? We're going to find out.
Can you see a way, actually, to resolve this without an unwind?
Well, I think the real question, there have been so many people, myself included, who have said there's no free lunch. You can't just have central banks print money out of thin air to pump up asset prices without there being a penalty to pay someday for that largesse. If that's true, and we don't know that it's true for certain, a lot of people who say that are sort of assuming that, there's no free lunch, you can't get something for nothing. Surely there has to be a cost to be paid. If there's going to be a cost to be paid, it's very likely that the next cyclical downturn in the economy is the catalyst that gets it started, and then it cascades out of control. The counter argument is that no, Ben Bernanke was a genius, and quantitative easing was a brilliant idea. Japan started doing it long before anybody else. Everybody said that the Japanese government bond market was going to blow up, and a whole lot of smart people lost money betting that it would, and it didn't. And we've seen epic record low interest rates in Japan for decades. Now, their economy is not in good shape, and I certainly don't think it's all roses in Japan, but it hasn't blown up and fallen apart catastrophically the way a lot of people predicted that it would. So I think the counter argument for why maybe things are not so bad and we're just going to have a cyclical downturn and then go into the next cyclical upturn, the argument there is look at Japan and look at how it didn't blow up the way everybody said, and maybe central banks really can get away with stimulating the economy with what is effectively printed money, although that's not quite accurate technically, and it works. I'm very skeptical of that, and I think that there's a lot of research that says when you get to 100% debt to GDP ratio, a lot of things kind of go into a cycle where there's no turning back. Now, let's suppose that that's wrong. That was Reinhardt and Rogoff's research from Harvard University. Suppose they got it wrong, and it's really not so bad because Japan is already more than 200% debt to GDP. Well, the number is not 10,000%. We can't get there. And if you look at the trajectory of government deficit spending, that's the direction we're headed in. So I know this can't go on forever. The question is, how long can we get away with the reckless actions that governments have pursued for the last several decades and gotten away with it so far? What I do know with extreme confidence is that if governments got away with something for several decades, all the politicians know that it's unlikely that whatever blows up is going to blow up on their watch. So they're going to continue to be reckless until something breaks. How long does it take, and how does it break, and how bad is it when it breaks, and what does it lead to? That really is the question. Nobody knows the answer.
In hindsight, assuming that a cyclical downturn ensues, who would you say have been the big winners of the last 10 years, who have profited the most? Different market actors, different companies and sectors, who have profited the most from quantitative easing?
I think I would say rather than geographic sectors of Europe versus US, I would look at asset classes. Everybody's worried about a crash in the stock market. I'm not so worried about that. I'm worried about the way bond markets have been inflated. There are European junk bonds that are yielding lower than US treasuries. It makes absolutely no sense. And you can explain it. How could that ever have occurred? Well, if you look at central bank policy, what the ECB has been doing and so forth, you can explain how we got here. But it doesn't make any economic sense to have junk-rated debt at these incredibly low yields. So I think that it is bond markets and particularly low-quality corporates that are where things could really fall apart the most. And one of the things that a lot of people don't really understand is there's this barrier that when a whole bunch of institutions own a huge number of bonds, and because those institutions are regulated and are only allowed by law to hold investment-grade assets, that means that when those bonds are downgraded from BBB, which there's just a huge amount of BBB-rated corporate debt in the system, when it gets downgraded because of an economic downturn, maybe the default rate goes up or something, it's not a discretionary choice that those professional asset managers are allowed to make to decide whether to sell it or not. As soon as it's downgraded and it's no longer investment grade, they're not allowed to keep it on their books by mandate, and their regulators will enforce that on them. That means there's forced selling of an immense amount of debt. Who are they going to sell it to? All they can sell it to are hedge funds that are allowed to speculate in low-quality debt and retail investors that are not subject to an investment-grade mandate. So what happens if we see the beginning of a crashing corporate bond market and all of these triple Bs are being downgraded and all of a sudden they're triple Cs, they're no longer investment grade, they have to be sold and there's not enough liquidity to buy them. And that's how you could see a crash in triple B rated corporate debt. And one of the things I've been looking at is ways to short that, because I know that's coming someday. Now that doesn't mean it's going to happen tomorrow. We're already seeing the beginnings of signs of weakness in actual junk rated debt. The thing is, everybody knows the junk is junk. It's the stuff that they're assuming is not junk and is going to stay not junk that could turn into junk and force that wholesale liquidation. And I think that's where the real risk is in the corporate market. So it's all over the world. I think it's in equity markets, which have been pumped up as well. The thing is, there's lots of people in the world who are invested in stocks, and they're smart enough to have organized their affairs so they're able to weather a major downturn in the stock market. They know that stock markets are inherently volatile. Prices go up and down, and at least the responsible investors in the audience knew to plan for that. A lot of people assume that the corporate bond market is much more stable and not susceptible to major loss of principal value the way the stock market is. And I think what we're going to find out in the next few years is that maybe at least certain segments of the low investment grade corporate bond market are much more susceptible to dramatic price decreases than even the stock market is. And if that starts to happen, it's going to catch a lot of people off guard. And I think it's potentially going to lead to a global debt crisis that will be much bigger than the 2009 event.
And what's your view on gold? It's related to a bond crash, I guess.
Well, I think that gold is going to be the trade. It's the thing that you're going to want to own when this all comes unraveled. The thing is it really coming unraveled yet? Gold tends to trade opposite the U.S. dollar index because gold on almost all international markets is priced in U.S. dollars. So there's an inverse relationship. As the value of the dollar goes up, the value of gold is expressed in dollars goes down. Well, right now there's a lot of reasons to think that this dollar liquidity squeeze is going to continue. That means U.S. dollar is more and more scarce and appreciates relative to other currencies. That ought to be in the short term bearish for gold. Now, what we've seen just in the last few weeks is that historic inverse correlation relationship has started to fade, and we've seen several days in recent weeks where gold and the dollar index are both up on the same day. Eventually, I predict that we'll get to gold and the dollar both appreciating because they're both safe haven assets that flight capital from other markets is fleeing into. Are we really there yet? It seems like maybe we're on the cusp of it. So I think it's probably time to start looking pretty darn seriously at gold. The big caveat, though, is don't be at all surprised if we go down to, let's say, $1,000 or even $900 an ounce before this is over. There's room, if you think about what happened in the 2008-2009 crisis, there was every reason to argue that gold should have been the benefactor. But what happened in the real heat of the crisis was everybody was selling everything, and gold went down dramatically along with everything else. It then recovered faster than everything else, and there was a much bigger profit much sooner in gold than in anything else. And I think that's going to happen again, and it's going to be even more pronounced this time. The thing is, it's that down before the up that may still be ahead of us. So I would say gold is a fantastic long-term investment for anyone who is prepared to weather the storm and be ready to have it go down 25% before it goes up 1,000%. And of course, I can't guarantee it would go up 1,000%. I say that as a possibility. I think that it going up 100% is very likely, and there's a good chance that we go down 25% before we go up 100%.
In my view, if you have the choice between something that could go down 25%, but if gold goes down 25% versus the dollar, that would make it that's almost the cost of production. And given everything we know with money printing and so on and safety, it seems as if minus 25%, that's almost the absolute worst case you can think of in gold. Of course, there are worst cases, but they're pretty darn close. And the upside, as you say, it's easily 250% if we are talking about some kind of a reset or starting a digital currency backed by gold. So 25 versus, for example, 250%. It sounds like this is not a trade that you want to wait out to get the absolute perfect price on.
Oh, I couldn't agree more. And I just feel a responsibility. We're doing a podcast to a number of listeners with different levels of investment background. I don't want somebody to hear this, buy gold, and then it goes down 10%, and they say, that turned out to be wrong. That guy didn't know what he was talking about. I'll sell it here and take the loss. If you're buying gold, you got to be ready to weather what could be a very windy storm. So I think that if you're able to weather that storm and not worry too much about maybe a 25% down, as you say, there's a very, very good chance of a 200% up before it's over. Just be ready to ride that potential J curve that we could see.
And then that brings us to Tesla. I'm not sure if you actually have a view on Tesla that you want to discuss, but for me, this is really is getting personal almost, and never really should do that in the stock market. But for me, the stock really is a zero. I can't see any value that stock is creating up and above the $12 billion in net debt. But
looking at the stock and looking at Elon Musk's behavior and that the SEC really isn't doing anything, it tells me that there are hidden factors at play here, something that we don't know, and therefore you really should stay away. Maybe he has some kind of a information on everybody involved, or I don't know. I'm getting paranoid about this stock. Do you want to discuss Tesla in particular, or maybe just the phenomenon of that if you don't know what's going on and things look suspicious, then it's better to stay away?
Yeah, well, I've certainly learned my lesson on this. I started shorting Tesla in 2013 when it went over $100, and I was absolutely certain that the shares were not worth any more than $20. I'm still certain that the shares are not worth more than $20. They never were. That company has never had a viable business plan. And the big mistake that most people are making is they're so excited. They think that Musk is such a smart guy because he was involved in PayPal, and they're thinking in high-tech earnings multiple mentality. If this was a software company that was doing something so cool, and all you have to do is get the engineering right, and then you can sell as many copies of it as you want, and your cost of producing those extra copies is copying a file onto a CD or however you're distributing it. That's the way the software industry works. It would be worth these huge multiples. We're talking about a car company that has to manufacture great big pieces of steel that cost money, and it's something that they're frankly not very good at, and they're rapidly being overtaken in the marketplace. They were a leader in technology innovation. What they've done is they have subsidized the development of this market to allow Porsche and other companies, which are better at building physical hunks of metal with engines in them and delivering much better quality than Tesla has been able to demonstrate. Those companies have allowed Tesla to make all the investment in developing the technology and testing the ideas and so forth, so that they can then copy them and do a better job of delivering a higher quality product. So Tesla is a company that has never had a viable business plan and which has never been able to even remotely justify its massive earnings multiple, because it's not a tech company. It is an industrial car production company. That's the product they sell at the end of the day. And investors have lost sight of that. But the thing is, and the reason that I was wrong to short it in 2013 is Elon Musk is the most accomplished salesman and evangelist probably in our time. There hasn't been probably anyone since P.T. Barnum that has the ability to just somehow magically hypnotize zillions of people. Can you name any other person in any industry anywhere on the planet who can be facing massive losses, things that could only be described by any sane person as defeat and failure, and just smiled and said, you know what we're going to do? We're going to introduce a $600 butane lighter called Not a Flamethrower and make a profit on it. And he does so. And he distracts everyone's attention from the fact that his car company was never viable and is failing very badly at building quality cars at a profit. And everybody goes and gets excited, and it's all over the internet. You can't stop seeing these flamethrowers. Where have you ever encountered a salesman who had the talent to use distraction and misdirection to get people to stop paying attention to what's important and to spend $600 on a butane lighter, which is not a flamethrower? Nobody else has that talent. So you're dealing in, look at this thing. He made an egregious violation of securities laws, made a representation on Twitter that funding was secured for a buyout at $425. And who else on this planet has the ability to say to the SEC, that is actually a violation of almost every law in your books, but hey, I'm a really popular guy and everybody loves me. And have you seen my flamethrowers? They're really cool. And the SEC responds and says, okay, well, just don't call yourself chairman anymore. We'll call that good enough. We're not going to, really make a big deal out of this. Anybody else would go to jail. So there's something magical about this guy, that he has the ability. Bill Clinton's the only other person I can think of who can just ignore the law, do whatever he wants, and nothing sticks to him. And Tesla is Bill Clinton times 1,000. He gets away with doing absolutely anything. So, I want to short this stock, but look at what's happened just in the last few months when it's been painfully clear to even the people that just couldn't see it before are finally waking up in the investment community and saying, this is ridiculous. Well, we've bounced off of that SEC low, and what are we at, 370 or something now? I mean, it's completely crazy. So I think you just have to accept that when somebody has a magical Pied Piper-like ability to misdirect everyone, that's a talent you don't want to mess with if you're trading on the short side.
And if we're looking a bit bigger picture on the financial markets, what's your view on algorithmic trading and the way it's changing the fundamentals of the investment landscape? Do you think it's seriously altering it and almost leaving no place for humans, like AlphaGo Zero has done for board games? Or is this maybe a temporary fad?
Oh, I don't think it's a temporary fad at all. I think it is the source of the next major crisis. And the thing that most people don't really take into consideration is they'll say, well, we had algorithmic trading in 2008, 2009. It didn't exacerbate things that much. We really didn't have anything remotely close to what we have now. Reg NMS, which is what opened the door to all of this stuff, was passed in 2007. But they only started writing the computer programs that do all of this algorithmic trading in the end of 2007. By the time we got to 2008, it was a nascent industry that really had not even begun to take over the market the way it has now. These days, something like 75% of all transaction volume is high frequency and other algorithmic trading systems. And the thing that I think is going to be the really pronounced change is, so far, what we've seen is 10 years of up, where central bank largesse has fueled this massive explosion of a bubble in asset prices. There's the old expression that you take the escalator up and the freight elevator down. It's a very quick ride down after a long ride up. I think that quick ride down is going to be warp factor 12 on the Starship Enterprise pointed straight down. I mean, we're going to get to a situation where the computers recognize that a serious crash type of event is upon us, and they're going to react in milliseconds and sell everything hand over fist. And it's going to result in a situation where before the humans even figure out what happened, the market crash is over and there was no chance to get out halfway through because, price and circuit breakers will slow it down to some extent, but that's all programmed into these systems. They're very smart. So I think that the algorithmic systems will exacerbate the move down. You say, well, but, regulators could step in and just insist that those things be turned off if they become a problem. What people forget is that the market for specialists and market makers, the humans that used to be responsible for providing liquidity in the marketplace, they all got run out of business years ago by the high-frequency traders. So you can't turn it off now because there is no other source of liquidity in the marketplace. If you turned it off, all the specialists, those guys all retired after they're like travel agents. Their business is just not viable anymore. So we're now reliant on computers that create a downside risk that nobody understands. And I think we're going to come to understand that risk, and it's going to be a frightening moment when we do.
Let's continue on technology in general. You have a background as a technology entrepreneur. So what area of technology do you find most interesting or fascinating or practical or just important?
I think that the narrative that you hear in the investment community about artificial intelligence is misplaced. What everybody is focused on is this essentially the plot from the Terminator movies, what some people call the singularity, which means that machines develop an actual consciousness and they become evil and they want to, eliminate the humans as a disease that they want to disinfect from the planet, and the Terminators come back into 1984 and kill everybody. I suppose that it is conceivable someday that artificial intelligence evolves to the point where maybe that does start to be a risk, but frankly, I think it's still a little bit far-fetched, and far more importantly, already today, artificial intelligence poses a much, much bigger threat than almost anyone is talking about. And it's not because machines are going to develop consciousness and personality and turn into evil dictators. It's because we already have technology that's being employed to do things that it's poor judgment on the part of human beings to put technology in charge of things it shouldn't be. They've got robots now armed with machine guns that go into battlefields and decide who should get killed and who shouldn't get killed. They probably do a pretty good job most of the time. But these systems are obviously, there can always be bugs in any computer system. And when you've got a bug in a computer system that causes your Excel spreadsheet to crash on you and you lose your file, that's one thing. When the computer is running a robot with a machine gun, that's a different story. And we've got this facial recognition stuff now. There have already been cases of incorrect, false positive identity. There was a case in Florida where a police officer shot and killed someone in a traffic stop because of mistaken identity as a result of some computer system thinking they were an extreme risk. And the person hadn't really done anything wrong. So we're already seeing these things. And I think that the technology that already exists today and is being deployed today is creating an Orwellian police state that very seriously threatens our liberties. And I think it's a very bad thing. You don't need to wait for the singularity to happen before you should be afraid of artificial intelligence.
What would you do now if you were starting over your software career? What sort of software programs would you be interested in learning, and what kind of entrepreneurial opportunities would you look for?
Well, the one that I'm obsessed with right now, we'll get to in a few minutes, which is the opportunity to re-engineer the entire global monetary system using digital currency. I think that is going to be the most fascinating technological challenge of the last 50 years. It's going to be an amazing thing. But why don't I save that one until we get into talking about digital currency. If I had to do things over again, the business that I ran was a niche consultancy, and we were very good at what we did, but we were delivering technology talent to large businesses that needed our help building their own systems. What I would have done differently, I think, is to build application systems that solve problems in the real world using technology, because I think that would be far more rewarding than being the captain of a team of really smart consultants who got put to work doing fairly boring projects for banks and so forth. I think that there is a very different frontier that exists today in software entrepreneurship than ever did in my day. The people of my day had an opportunity to make money, and that was great. We were paid better than a lot of other people in society, and that certainly is a pleasant experience. Today's software entrepreneurs, today's Silicon Valley leaders are making decisions that set the course of society around issues like privacy and personal data. I don't think that they should be, but the reality of the situation is they are. And so I think that if I were today involved as a captain of Silicon Valley, I would be looking to figure out how can I make money while still doing the right thing for society rather than taking the Facebook approach.
All right. Let's move on to more personal development and decision strategy, and later on also your book and digital currency. So let's start with what coincidences would you say have shaped you, that have put you in the way of opportunities that you either seized or didn't seize?
Wow, that's an interesting one. I would say probably the best insight I can offer to your listeners there were so many opportunities early in my career that I didn't recognize because I was just focused on the fairly narrow framework of, what are the rules? You've got a job, you've got a boss, you're supposed to do your thing. I wasn't really looking at the world around me saying, where is there opportunity to do a smart thing where other people are doing dumb things and to make money at it? So if I had broadened my perspective earlier in life and really kept my eyes open, I would have had lots and lots of opportunities to recognize entire fields of business where there was opportunity to use my software skills to build a better mousetrap. As far as opportunity that I've missed or should have pursued, I should have trusted my own judgment when I sold my software company. I really wanted to be a full-time investor and run my own money. And it was a lawyer who talked me out of that and said, Erik, look, you're a smart guy, but you're a software guy. A lot of entrepreneurs who are successful let it go to their heads. You think you can be successful at investing. You should let the professionals at an investment bank run your money for you. They're trained in this. They're professionals. They know what they're doing. Well, the professionals didn't take long to lose half of my fortune, and I've done quite a bit better than they did, even if you wanted to call me an amateur at first. I still did better. I think anyone is better running their own money than ever entrusting Wall Street to do it for them. So trusting my own judgment and and my own instincts and not allowing that very strong advice from a lawyer to have influenced me would have changed my life dramatically. So I would say trust yourself, but mostly look for opportunity and don't let the rules slow you down. And I certainly don't mean go and break the law or anything, but the fact that, let's say you work in some company doing something and your job is only allows you to do whatever it allows you to do. Don't stop opening your eyes and looking around you and saying, what is being done stupidly here that somebody could make a fortune starting a new company to do differently? Wake up every day asking yourself that question. And someday you'll say, oh, that is. And then you start to look for, okay, how do I be the guy to keep my current job, at least as long as I have to, while I start that company and do something to change the world for the better?
I think that's great advice. I myself definitely was a conformist and a rule follower to the letter. And I definitely encourage everybody to just look around and see what is it that I can contribute or change. So what would you say was your most value-creating decision or decisions? Doesn't have to be the one, but if you can just elaborate a bit on that question.
Well, my most, I guess, sticking to your guns and really knowing when you're right and not giving up is really important. I had a vision in 1984 that the entire IT industry was being stupid about how they built application software. And I had a better way. That better way is now called service-oriented architecture. You can look it up in Wikipedia if you want to know what it is. I had that vision. I'm sure there were probably other people thinking about it as early as I was. There's always lots of smart guys in the software business. But I had an idea that most of the industry thought was crazy, and I never gave up on it. And eventually it became a standard way of doing things. So I think that anyone who is forward-thinking and can see things that other people don't is going to face a life of constant frustration because everyone around you is telling you, no, that's not the way it's done. Nobody else does it that way. You can't find anyone else that's doing it that way. What's wrong with you? That's not how it's supposed to be done. You've got to have the conviction to believe in yourself and to say, precisely, if other people were doing it that way, I would have competition. I have no competition because I've chosen something very consciously and intentionally that everybody's getting wrong. And I can see a better way, and I believe in myself, and I know that my better way really is better. And going back to what you said just a minute ago, I think that a real problem that we have that holds society back is there's people who are conformists who never break the rules, and then there are people who are rule breakers, and they're the ones who tend to break all of the rules. They don't take any rules seriously. They're reckless and they're careless, and they're never successful. The people that we owe all progress in society to are the people who are responsible, mature adults who say, look, I'm going to follow most of the rules. I'm not going to drive recklessly and endanger other drivers on the road, and I'm not going to just be a crazy person that ignores rules. But when I see rules that make no sense and serve nobody, I'm going to recognize not only my opportunity, but I would even argue my civic duty to say, this is dumb. The world is doing this thing in a dumb way. I'm going to show them how to do it in a better way. You don't have to be a troublemaker in order to be a rule breaker, but it seems like the only people that are willing to break the rules in society are the people who are troublemakers at heart, and they tend to get in trouble. Can you break the rules without being a troublemaker and have the wisdom to know the difference? I think that's really the key.
Could you go back a little bit to the moment when you first had the idea that the way that other people were doing service-oriented architecture was stupid? How did you have that idea, and what were they doing that was stupid?
Well, I spent most of my high school years sneaking into MIT and learning about the internet when it was still called the ARPANET, and I didn't know at the time that the grad students I was hanging out and drinking beer with were some of the smartest people in the entire computer industry. When I went to work in the IT industry, there was nobody was using the network. That we had networks, but nobody used them for anything other than file transfer and remote login. So the idea of designing application systems to embrace the network and talk to one another through the network, nobody did that, and nobody had ever thought of doing that. Well, the guys at MIT were doing it that way, so I just thought, well, I already saw a taste when I was in high school of a much smarter way of doing this. Why isn't anyone else doing it that way? And I was working on a shop floor factory data collection system. We're writing all these programs that was actually called the Integrated Factory Information Network, and I thought it was ridiculous that we're even calling it a network when it runs on a computer that's on a network and the software never uses the network. We're not a network. We're standalone application programs running on a computer that happens to be sitting on a network. This is crazy. And so I started talking to my management about how we could design a better mousetrap, applications that are designed to communicate with other applications through the network in real time. And nobody else was doing things that way. And I was just had a lot of patience and perseverance. I had all kinds of people that were older than me telling me, why don't I just use the network for what it was designed for? File transfer and remote login. Why are you trying to make it more complicated than it has to be? Why can't you just use batch processing the way the entire IT industry had been structured until then? And the answer was because it was a dumb idea and there was a better way. And I could see what the better way was. And I wasn't going to allow people who happened to be older and more experienced than me to tell me that something that didn't make sense did make sense just because other people did it that way. And I remember all of these long conversations where they would try to get through to me saying, Erik, why can't you get it through your head that nobody else does it that way? And I would answer them and say, the reason I can't get it through my head is because when I ask you politely, why are they still doing it that way when there's clearly and obviously a better way to do it, that you're unable to make a persuasive argument. That's the reason. So give me the persuasive argument. I'm waiting. Everybody does it that way. Nobody does it the way you want it. That wasn't the question. The question was, I've described the benefits of my approach. Please describe the benefits of your approach. Why is it doing the way everybody else does it better other than because everybody else is doing it that way? And they couldn't provide an answer. And so I was just very persistent. And eventually I'd actually sold my company and retired before the catchphrase service-oriented architecture was even coined to describe the approach of designing application software so that from the ground up it was built to communicate with other application programs through a network. It wasn't the way that things were built previous to that. It's the way that they did things at MIT in the 1970s. That's where I learned about it.
And now you're in a ways at it again. You're fighting the majority with your views of digital currency and cryptocurrencies.
That certainly is true, and it's interesting. It's a very, very strong majority, and there's several majorities. There are some that are saying, it's all about cryptocurrency, and if you're not a Bitcoin maximalist, then you're not part of the religion, and we don't like you. And then there's people who just want to naysay cryptocurrency, and they don't want to hear anything about any digital currency. So yeah, I'm in a very small minority again. I don't think anybody else has exactly the view that I have on digital currency.
Oh, so in your book, Beyond Blockchain, which I, by the way, highly recommend for anybody interested in digital currencies as well as cryptocurrencies, if cryptocurrencies aren't the big play for investors and VCs, what is?
I think the really big play for investors and VCs is so big that it is bigger than all of the FANG stocks combined. And the big play is to recognize that the global monetary system is antique, broken, and in need of overhaul, and to redesign the entire fractional reserve banking system around a new global digital currency system, which is not a cryptocurrency. Cryptocurrencies, at least as I define them, are things like Bitcoin that were designed by activists that had a view that government-issued money was bad, and they're basically thumbing their nose at the government saying, we can come up with something better and we can compete with you and you can't stop us, so there. The government can stop them. The government hasn't woken up to how much of a threat they pose. Eventually it will. I don't think that's the opportunity. I think the opportunity is to look at the governments of the world as your customer and to say, how do we design a global digital currency system, and beyond that, eventually a credit system, which is so superior to the way that things have been done for the last several hundred years that we can sell it to the central bankers of the world and have it be adopted as a new global digital currency standard that replaces the US dollar as the world's global reserve currency. One of the things that you've got going for you right now is there's a whole lot of people around the world that are sick of the US dollar being in the role of global reserve currency. So you've you've got a lot of interested ears ready to hear that sales pitch. I believe that it is possible to use some innovations that were pioneered by the cryptocurrency crowd to design a digital currency system which could completely revolutionize the way the entire world works and does business. And I think the real opportunity is for somebody to design that new global money system, set it up as a Silicon Valley startup, a tech startup, where you have both the macro, the finance as well as the technology smarts to really design a better global reserve currency that is a digital currency system, and prototype it and write the white paper, do the think tank work, and then sell it to the central bankers of the world so that you can build it and have it be adopted by an independent digital central bank. And I believe that the best way to exploit this technology is to recognize that what distributed ledger actually enables for us is the opportunity to have an independent global central bank which is not beholden to any government, that no government is in charge of, which can be responsible for administering a global digital currency system. And the advantage of the technology is it's a whole new architecture of trust. It allows you to have systems where there is no one party that's in charge of everything, and it requires the cooperation of a number of governments around the world, and nobody can cheat the system by saying, we're the United States, we're in charge of everything, everybody else has to do things according to the way we dictate because we're in charge. Nobody's in charge, and the system exists to benefit all of humanity. The technology that is now available, and it's in its infancy, I'm not saying we're ready to build this whole system tomorrow. There's a lot of engineering that needs to be done, but the vision is clear in my mind, just as it was in 1984, how we're going to eventually get to not service-oriented architecture, but a whole new economic system, whole new monetary system.
Let's assume someone wants to do this, or maybe even like a younger version of you wanted to do this. What would you do to sell this to the central bankers? What do you think would be an interesting value proposition for them?
I think that what you do is you hire the talent that you need to not just have some silly little prototype like a cryptocurrency, but you really put the effort into designing a scalable global digital currency system that is designed to replace the US dollar as the world's global currency, which is designed to offer all of the central banks of the world much more robust monetary policy tools than they have today. And the reason that's so important is central bankers are absolutely critical to this. That's what they care about. So what you've got to think about when you design this system is what's going to appeal most to central bankers. Design it, put the presentation together so that you can go and make your pitch and say, look, we're going to build this system that is a digital currency system that can scale globally, that can become a replacement for the US dollar, and we want central banks of the world to buy in to a strategy where over the next several years, we're going to introduce this global currency system. Initially, it'll have to be introduced incrementally, where initially it's just a global payment system, a replacement for the SWIFT wire transfer network. But eventually it gets to the point where all of your point of sale transactions that are processed by credit cards today, everything that's done on a debit card or a cash card, your cashless society that you're already developing in Sweden, all of that stuff merges into a single global digital currency system, which no single government is in charge of or able to control and dictate terms to the rest of the world over. You do the design work, the think tank work is what we can do now. You can't build this system now because it requires distributed ledger. It requires advances in distributed ledger technology that we don't have yet. So eventually you'll be able to build this extremely sophisticated system that will change the whole world, and I think you could start selling it today to central bankers. The reason that the opportunity is ripe to start selling it today is a whole lot of central bankers around the world are sick of the US dollar and the US government having hegemony over the whole system. Now, if you do it as a Silicon Valley startup, you've kind of got a challenge there, which is the US government may not like you pitching to other central banks that the advantage of the system is the US government no longer enjoys autocratic authority to tell everybody else what to do. The US government may not want you to be successful once they figure out that that's what you're up to. I'd have to think about how to solve that problem. But in general, I think that you start by designing what the benefits would be, because clearly the central bankers don't get it. They look at cryptocurrency and they're so narrow-minded. They just see, okay, crypto is designed to take power away from central central banks. We don't like that. This thing is no good. Let's not pay attention to it. They don't seem to have the imagination to say, wait a minute, technology is a double-edged sword. If they use technology to design Bitcoin to take power away from central bankers, you could have used technology in the opposite direction to give central bankers more robust monetary policy tools, better control and ability to monitor and oversee the system. Once we've got to just get the central bankers past that very basic conceptual hurdle to recognize that technology could help them if they would open their minds. And then you've got to put together a really compelling sales pitch and describe the design of a currency system in terminology that the bankers can understand that really exploits and leverages technology in order to do what they need it to do in order to give them better control over the financial system. You can do all of that today. Now, as far as actually building the currency system that I envision, building the replacement for SWIFT is easy. We got the technology for that right now. If you're talking about building a digital currency system that can support several 100,000 transactions per second, all the transactions that the world's credit card networks and ATM networks process today, all on a distributed ledger, we don't have that technology yet. But my contention is we can easily create that technology sooner than we can explain to the central bankers what it is and what it's for and why they want it.
So, two quick follow-up questions on that. First of all, you say that it's required to have several 100,000 transactions per second for a global monetary system. In contrast to that, where would you place it? Where would you place the existing distributed ledger technology?
Well, the Bitcoin network only processes about 7 transactions per second. That really is the number 7, not 7 million, not 7,000, but 7. Ethereum is faster at 15 transactions per second. Now, those are fully decentralized distributed ledgers, which rely on an extremely inefficient algorithm called proof of work, which a lot of people think is a benefit of Bitcoin. It's not. It's a shortcoming. Eventually, we're going to figure out a better way to develop a fully decentralized distributed ledger that doesn't need proof of work. And then we'll get to, right now, the XRP ledger, which uses a permissioned ledger as opposed to a fully decentralized ledger. It does about 1,500 transactions per second. So we're still in the hundreds. And meanwhile, if you look at something like the Visa credit card network, they're capable of supporting up to 48,000 transactions per second globally. If you want to say, well, it's not just the Visa network, but it's all of the credit card networks globally, ATM networks, wire transfers, you're going to have a single digital currency system that replaces all of the different payment systems that exist in the world. It's hundreds of thousands of transactions per second. You don't need anything close to that to get started. Any technology needs to be introduced incrementally. The first step here is a replacement for the SWIFT payment system, and even Bitcoin speeds of 7 to 10 transactions per second are enough to replace the way the SWIFT payment system works today. So there's plenty to get started with. Eventually, if you have a long-term goal, which I do, of seeing all of the payment systems on Earth using the same distributed ledger and a single uniform or universal currency and payment system, that requires a whole lot of technology that doesn't exist yet. Again, we'll be able to build the technology faster than we're able to evolve society to being ready to accept it. So I'm not worried about the availability of technology. I'm more concerned about what it's going to take to get the bankers, and particularly the central bankers of the world, to recognize how much opportunity exists to re-engineer the entire fractional reserve banking system.
Right, okay. Thank you for explaining that and putting it into context. What you're saying now, that leads to my second thing that I'm wondering about, which is what sort of monetary policy tools do you believe the central bankers would like the most?
Well, it's actually kind of a scary question. Sometimes I get worried that the ones that they might like the most might not be good for humanity. So let's start with the way that central banks manage the economy is just incredibly inefficient and unsophisticated. They set what are called policy rates, which aren't even the interest rates that directly affect the economy, but they affect the bankers, and there's a transmission effect there where they figure that if they change how much bankers are paying for their own overnight loans, that's going to influence the rates that they charge other people for loans. And as they charge other people different rates for loans, that's going to hopefully encourage or discourage more lending, which is really where money supply creation occurs, is in the commercial banking system. Well, what if you had a completely different architecture where you had digital currency technology that, first of all, gives central bankers real-time instrumentation? So every time a bank makes a loan, there's a real-time update on the central banker's dashboard showing exactly what's going on in the credit system. So instead of estimates that are compiled by analysts that are months, backward-looking, several months in the past, what central bankers are working from is some analyst report that says we estimate that the money supply grew by X amount 3 months ago. If they were able to see in real time that the money supply grew by X amount exactly to the penny in the last 10 minutes because we're measuring it and we have accurate instrumentation, just that accurate instrumentation by itself would be a game changer. And that's very easy to do with digital currency technology. Now, as you get into, let's take some of these controversial policies like quantitative easing. The whole problem with quantitative easing was you could conjure money out of thin air, and by buying up a whole bunch of government bonds, you could get that money into the hands of commercial bankers, but you couldn't control what the commercial bankers did with it once they got it. So in a lot of cases, central banks were putting that money into the hands of commercial bankers because they wanted them to loan to consumers and businesses in order to get the economy going. Instead, in a lot of cases, they used the money for other purposes, like speculating in the stock market or just arbitraging the fact that there was basically a free giveaway of cash in the system, in the sense that central bankers were offering these loans, but they were paying a greater rate of interest on excess reserve deposits. So all the bankers had to do was make the maximum possible, borrow the maximum possible amount at the discount rate and then deposit it as excess reserves and get paid a higher rate of interest. So there was a carry trade there, and it didn't benefit anybody, but actually, I'll take that back. It benefited the bankers. It didn't benefit society in any way. The central bankers had no ability to control what the money was being used for. And as I describe in the book, it would be very easy using digital currency technology to allow currency tokens to be created that have restricted use. You have to use this money that we're creating out of thin air if we're the central bank and giving to you as a commercial banker. You have to use it as reserves to reserve up additional lending. If you're not going to use it for that purpose, you're not allowed to use it for any other purpose. So you could easily design it so that those newly created currency tokens have that restriction with some expiration date, where for the first 3 years, those new dollars that are created have to be used to help loans be made to businesses and consumers that support the economy. And after those 3 years, that money turns into regular money that can flow through the economy and do whatever. So there's all kinds of things that you could do. And I don't claim to have even thought of them all yet. My point is, if you think about the introduction of the personal computer back in the late 70s, a lot of people were asking the inventors of personal computers, what would an individual do with their own computer? Why would anybody want one of these? In a lot of cases, they couldn't answer the question. And the most common answer is they said, well, you could use it to balance your checkbook. That would be one example. They couldn't come up with examples like spreadsheet programs and word processing programs and Photoshop and web browsers and so forth, because the creativity hadn't been harvested yet to think up those ideas. What they were doing is they were providing a platform, an affordable computer that anybody can afford to own, and they were creating a market that allowed smart people to come along and say, hey, what could I dream up? Lotus 123 spreadsheet program, make millions of dollars inventing that. The next guy comes along and says, hey, Photoshop, I'll do that. PageMaker, whatever the idea was. So they were providing a platform, and I think that a digital currency system that is government sanctioned and globally scalable, it's like introducing the personal computer. The innovations for what all the applications are that people are going to think of to run on top of it, no one person is smart enough to think them all up. What you want to do is design a flexible payment system that allows other applications to be built on top of it. And there's some very pioneering work being done in the cryptocurrency space around something called smart contracts, which is basically this idea of application programs that are built on top of an electronic currency system. And it's opening the door for a whole new age of innovation. And I don't know what all the answers are, but it's going to be amazing when we get there.
In one of your final chapters of the book, you walk through a scenario of how to create a gold gold-backed global digital currency. Do you want to save that chapter for readers of the book, or could you tell us the basics of how that would work?
Well, we can certainly, the whole chapter would take longer than we've got, but I'll certainly give you the basics. If you're trying to introduce a digital currency system and you're competing with the well-entrenched existing currency systems of the world, dollars and euros and yen and so forth, how do you compete? How do you entice people to want to use your digital currency system instead of the old-fashioned way? Certainly, a lot of people in finance are used to doing things the old-fashioned way. They don't change to learning a new trick unless they've got a good reason to. I think that a gold-backed digital currency could be that edge that really compels people. More and more smart people around the world have recognized what we described early in this interview, which is the world's asset markets have been propped up by artificial means. There's a risk of a bust coming that could be colossal. If things fall apart, I really don't want all of my assets to be in Bitcoin, say, which is just digital tokens with nothing behind them. On the other hand, if I had a digital currency system which was actually backed as representational money with gold in a vault where those digital currency tokens can be redeemed. You can go to the central bank and say, I want to trade these currency tokens in for physical gold bars. You're guaranteed the right to do so. I think that's a very, very compelling sales pitch. And you think about, do you want to buy sovereign debt around the world? Well, most sovereign debt around the world is not denominated in local currencies. And one of the reasons for that is because the lenders don't really want to be owed debt in those local currencies because they don't know what the currency is going to do. They don't trust it. They want U.S. dollars. So far, nobody questions U.S. dollars because the U.S. dollar has been considered just stable and completely reliable, better than any other currency. Well, what if you had a gold-backed digital currency system and you're getting into the point where the U.S. government is now continuing to deficit spend past $25 trillion of national debt, well beyond 100% debt to GDP ratio? Which would you rather have, U.S. dollars and your debt denominated in U.S. dollars, which are really just a promise by the U.S. government, which could never repay its debt in real terms, or the sovereign debt from various countries around the world denominated in a new gold-backed digital currency, where no matter what happens, even though it might not be the full value of your investment, you can get a good chunk of it back just by going and exchanging your currency tokens for the gold bars that are standing behind them in a vault in Switzerland someplace. That's a pretty compelling argument. So I think that the way that a digital currency system could compete with traditional currencies is by going back to representative money and offering a gold conversion right. It wouldn't be the full value. It would be something less than the full market value, but at least you'd have that protection that if things really start to fall apart, your dollar can go to zero, but your digital currency token can only go down 40% before the gold backing is worth more than the currency token, and now the arbitrage is just to take the gold and you've got physical bullion in your pocket. So the convenience of digital currency backed by physical gold, which has proven its store of value for more than 10,000 years, seems to me like a pretty good argument when the world's kind of falling apart around you.
On another topic, speaking of US debt, what do you say to people who say that, as long as the US economy is growing, there's no reason to be worried about debt?
Well, the really big reason to be worried about U.S. debt in specific is you've got to ask yourself, when so many people have said for so many years that these deficits were unsustainable, how is it that they really have gotten away with it? People say deficits don't matter. All the smart guys in the room say that's crazy, but then they get away with it. How is it possible? The answer is because the U.S. dollar serves as the world's global reserve currency. And what that means is that all of the central banks around the world have an artificial need to hold U.S. dollar denominated debt. And that really means U.S. Treasury bonds. So even though any other country on earth that was as reckless with its borrowing and spending as the U.S. would be punished with much, much higher Treasury yields and therefore a much higher cost of borrowing, the U.S. has had kind of a get-out-of-jail-free card that, as a result of being the world's global reserve currency, what it means is there's always an artificial demand, both for dollars and for dollar-denominated debt, and that allows them to sell U.S. treasuries and finance that debt very easily. What we're seeing right now is a huge groundswell. First, it was just China and Russia and countries that have been adversaries for decades. But now, just this past summer, we've had the European Union step up and say, hey, we're sick of the U.S. abusing its authority as global reserve currency issuer. We want to get on board with Russia and China on this de-dollarization campaign and start looking at things like an alternative for the SWIFT payment network, which is not under the thumb of the United States government. So we're seeing that there is a groundswell of interest in finding an alternative to the U.S. dollar. That's eventually going to result in that artificial demand for dollars going away, and it's not going to matter how much you grow. Deficits are going to matter, and they're going to matter a lot. And it's not going to be a function of the rate of U.S. economic growth. It's going to be a function of the U.S. dollar losing its reserve currency status and losing the preferential treatment that it gets for U.S. Treasury debt among central bankers. That's where the real risk is, and growth is not going to get you off the hook on that one.
Well, you also mention in your book about the petrodollar system. Don't you think that's also a good reason why dollar is quite reliable, that it's pegged to spending in oil?
Well, absolutely. One of the main reasons, I think, that the U.S. dollar has been able to retain its reserve currency status, despite President Nixon taking the U.S. off of the Bretton Woods gold standard back in 1971, is because of the petrodollar system. But the petrodollar system is breaking down. We've seen, everybody said this new yuan-denominated Shanghai futures contract for oil was never going to get any traction. And all of a sudden, in its first year, it's something in excess of 15% of traded market volume globally. It's getting major traction. We're seeing countries all around the world announcing initiatives to reprice oil in other currencies because they're getting sick of the U.S. asserting its hegemony over other countries because it is the international payment currency. So what we're seeing is the petrodollar system is breaking down as various countries around the world are abandoning the dollar. As that continues, it's going to put more and more pressure on the dollar.
Are you at all thinking of expanding the Macro Voices franchise in any way?
As far as a serious business, I thought about doing kind of a global accredited investor club or network, and it would be rewarding to do that, but I'm not sure that the amount of time and energy it would take would be something that I'd want to dedicate to it, because I would, if I were doing that, I'd have to stop trading and I'd have to replace the income that comes from trading.
When could we expect to see a global digital currency system?
I think it's when can you expect to see personal computers? They started in the early 70s. The first commercially produced personal computer systems were around 1973 or so. Only a handful of people knew that they existed. So the first global digital currency system will probably be something like the IMF is already talking about building, which would be an SDR-based settlement system that uses digital currency technology to settle payments between banks, and the rest of the world doesn't even know it's there. As far as the ultimate goal that I envision, which is re-engineering the entire fractional reserve banking system so that the entire money system is digital and it all works over the network in this new architecture of trust where no one government has more authority than the other governments to control it. 20 years probably, and that's optimistic to really get to the vision that I have. Maybe in the past, I've always, in 84, I thought it would be 5 years. It turned out to be 20 years. So it will take a long time to fully get to the vision that I'm thinking about, but I think that things are already starting today. The announcement that the IMF made on the very same day that my book was released was predicted in the book, and it's that central bankers would start looking at doing their own digital currencies. So it's already starting. As far as getting to the point where every payment on Earth that's currently under a credit card system or an ATM network or PayPal or anything else is all part of a distributed ledger-based digital currency system, probably at least 20 years.
And I just want to say that if you really want the answers to the question of when gold will hit $4,000 per ounce or when the digital global currency is in effect, then you really should subscribe to the Macro Voices Research Roundup free newsletter.
Which they can do at macrovoices.com. Just click on the subscribe for free button at the top of the page.
Great. All right. It's been great talking to you, Erik.
It's my pleasure. Thanks for having me.
that's all we have for today. Do subscribe to our newsletter over at www.futureskillspodcast.com, and you will get weekly summaries and a free ebook. As always, you can find the link to our newsletter in the bottom of the episode descriptions. Thank you for listening, and I'll see you next week.